Betsey Stevenson joins us. Betsey, a professor of public policy and economics at the University of Michigan, former member of the Council of Economic Advisors in the Obama administration. Welcome, Betsey. If I could start with the Fed, like I said, nobody expected Powell to give in to the pressure and cut rates now. What did you make of his comments afterwards? People know the Fed has this dual mandate, stable prices, maximum employment. I heard some concern about both there, which could be a potential stagflationary environment. What did you hear from Powell?
Well, I think he was very clear that he's concerned about both. He said the risk of inflation is up.
Yeah.
The risk of higher unemployment is up. They're both up. So there's nothing for us to do, because if we were fighting the higher unemployment, we would obviously cut rates. But we've also got to fight the higher inflation, which would mean actually raising rates. And so the best thing is for us just to stand still. I thought the most telling thing he said was, don't assume that rates need to go down next.
Right. That is true, because everyone says, oh, when are they going to cut? What are they going to cut? So is there a chance they don't, that the next move is higher?
Absolutely. I mean, I think he made that pretty clear. I think there was one point when a reporter asked him, well, when you cut rates, how far do you think you'll have to cut them? And he said, well, once we determine that that is the direction we would need to go. Which they
haven't yet. Well, imagine that. Imagine Trump would go through the roof on that. I mean, he wants rates to be down now. But what would have to happen for, so what he's literally, as we said, in wait and see mode. What is he watching? Obviously the tariffs and everything else, but what would have to happen for rates to not come down?
So here's the problem. We know that the tariffs are going to raise prices, which means that the inflation rate is going to jump up. The question will be, how does the public react to a one-time increase in prices? So the tariffs could cause a one-time jump up in prices, but that's going to mean your experience is high inflation right now. Now, does that change your expectation for where inflation is going to be next year or the year after? And that they don't know the answer to that, because honestly, we just had higher inflation in 2022, and people hung on, to reasonable inflation expectations coming out of that bump. But we don't know how much patience people are going to have for another bump up in inflation.
Right.
And, that's the story of the 1970s. Inflation jumped up, we got it down, and then it went up again, and then we lost control.
Yeah.
So he doesn't lose control. That would cause them to raise rates if they saw signs of inflation starting to get out of control.
Yeah,
Inflation
like old Volcker. I mean, they came in aggressively back then, right? So that would be, we don't want to repeat that. Can I get you on trade real quick on China? I think Besant is going to meet with them in Switzerland. Just a quick clip from President Trump before that, though. I was saying this last night. He always talks about trade kind of like it's this zero-sum game, and has been making comments like this. I want you to tell me what you think about it. Here he is.
We were losing $1 trillion a year. Now we're not losing anything. That's the way I look at it. We were losing with China on trade $1 trillion a year, more actually, 1.1. But let's say $1 trillion. You know what we're losing now? Nothing.
Does that make any sense to you?
No, unfortunately, it doesn't make any sense. So what he's basically assuming is that when we're buying things from China, that we would instead buy those things only domestically, and the whole globe would continue to buy from us in the same way.
Right.
And so we somehow no longer be losing. But that's not how the world works. When we're trading, it's because there are goods going out, goods and services going out, goods and services coming in, but there's also cash going in and out, right? So China might be investing in our treasury bills, in our debt, which actually helps keep interest rates low, which actually the way we're winning. So there's lots of ways to think about that incorrectly. But I think the most important thing for people to understand is that in today's complex global economy, almost every business has some part of it that is done internationally.
Right.
And cut off the ability to do that part internationally, we can accidentally kill the entire business. And there's a lot of American small business owners feeling that heat right now.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.